All attendees are in listen-only mode.
Hello, everybody. Ilan Asbel here. How are you all? Nice to see a lot of familiar faces. I was going to say familiar names, rather, in the room today from all over the world. Some on the west coast of the US and some on the east coast of Australia. So thank you to everybody for attending at these weird hours of day. It is a great honor and a great privilege to have with us today Raghee Horner, who I have known since, wow, Raghee, has it been, how long have you and I interacted in the FX market? I'm guessing close on 10 years, maybe getting on 10 years now?
I think it's been 8 or 10 years, Elon, that I've known you. Yes, absolutely.
Yes.
That I've been, well, first, before I knew you, I was a paying subscriber to AutoChartist, and then I met you afterwards.
Right, exactly. I think we bumped into each other at a trade show in New York, and that's how we started building our relationship. And you know, we've had a great relationship with Raghee over the years, and she's been a great inspiration to us. And it's an honor to actually have her. She's very busy. She's a professional trader. You know, I always talk about my trading experiences, but you know, I trade in the mornings for a few hours. I also have a job to do, but I do follow the markets. Raghee, on the other hand, is a professional trader. She's an absolutely amazing trainer, and really it's an honor to have her here. And she's going to talk today really not about, you know, which buttons to push in AutoChartist, you know, but really more about how she uses support and resistance and chart patterns in her day-to-day training. And I think this is going to be invaluable, and I absolutely look forward to her presentation. Raghee, before we get going, I was just hoping to maybe, if you could give our listeners just a bit of background on you on a personal level, how you got into trading, how long you've been trading, and what kind of things you do trade.
Sure. I actually got into trading in high school when I was about 16, 17 years old. And just kind of fast forwarding from there, I started day trading equities in the mid-90s. But before that, I was actually a fairly avid futures trader, end-of-day chart futures trader. And that's where I started getting into trend lines and support and resistance and ultimately chart patterns. And I always used to wonder, is there any way to automate this? You know, whenever anyone gets into trading, we always start to wonder, gosh, you know, is there any way to automate any of this? And again, fast forwarding, I found AutoChartist through my broker, quite accidentally, and got the plug-in on my platform and was a huge fan. I was actually a paying subscriber for quite some time. And then, as luck would have it, I met up, I believe, with you sometime at the New York Expo. And it was so exciting to be talking to this person who was behind this tool that I actually just loved. And again, fast forward a little bit more, getting involved with AutoChartist a little bit more professionally as I started to write books and offer analysis. I still remember fondly the first day that you showed me the Power Stats platform, which blew my mind. And it's one of those tools that, along with the automated chart pattern analysis and the support and resistance analysis and the scanning, the Power Stats, to me, I actually call it my secret weapon and begrudgingly share it with the rest of the world.
Right, it's actually interesting. I think it's probably one of the most underutilized tools at AutoChartist. But I hope you give people a glimpse of that during today's presentation.
I absolutely will. In fact, I had just gotten, as you had, I had just gotten out of a webinar myself, and I was setting up the evening trades. In other words, just the pairs that I'm looking at for this evening. We have you know, not to be too timely, but just to give you an idea, the listeners an idea of just how important the Power Stats is to me. So I'm actually setting up some trades in the Aussie and specifically the pound Kiwi right now. And I know that we have an enormous amount of data coming out of China tonight. We have RBA Governor Stevens speaking tonight. And a lot of traders think, well, that's fundamental analysis, Raghee. What does that have to do with AutoChartist? And my reply is, well, one, I can look at an economic calendar and simply understand that at certain times of day, there are going to be higher volatility events, and certainly the pairs that I'm watching can begin to move in a wider pip range. But to be able to go back and look at the historical expectations for what that pair can do on a particular day, at a particular time, that's why I call it my edge, because what I'll do now as I edge closer to those events tonight, I'll pull up power stats. I'll pull up the chart patterns and get an idea of...
I'm absolutely fascinated that you're avoiding the US dollar, Raghee. Sorry to interrupt you. Are you
No,
avoiding
no.
the US dollar? I mean, come on, we just solved all our problems. We've got another $1 trillion to play with. Why aren't you trading euro dollar?
You know, the truth of the matter is, and I'm glad you brought it up, the truth of the matter is, between my analysis, between some pip movement range studies, and between some chart patterns, namely one, I wrote an article about the pullback to a channel support, which was actually under the hour favorites on auto charts just a couple days ago. It was a channel in the pound US. I got long. So while today everybody might be looking at that dollar movement, I was already positioned long off channel support. So it's funny you mentioned that. The dollar to me is the old story today because the setups were there and alerted even 3 days ago.
Right, absolutely fascinating because I mean, you know, this morning I wake up and I put my Bloomberg television on and everyone's obviously just talking about dollar, or, you know, everything that's going on in the US. And it's actually interesting for me because, you know, the novice trader would go and look specifically at the euro dollar or the dollar crosses, you know, and look specifically on that for some action. But it's interesting that an experienced trader like you is actually looking elsewhere for opportunities. And I just found that absolutely fascinating. That you're kind of staying away from the, you know, all the sentiment and all the hype that's going on in the media at the moment, and kind of going where you believe the trades are actually happening.
Well, you know, the trade for the dollar happened for me in terms of the actual setup. Those happened along support and resistance levels that we were correcting to on the dollar bounce a day, sometimes 2 days ago. So today really is just a follow-through day, and anybody who studies price movement ranges, anyone who looks at chart patterns, and any kind of price action analysis, which I think chart patterns are a part of, you know that oftentimes your trades and your triggers come well ahead of the actual fundamental or actual geopolitical event, and therefore a day like today, probably I was mentioning to my group this morning in an earlier webinar, this is probably the best day I've had in about 6 weeks because we're finally getting the movement that we set up pretty much all week long. And I think that's the edge that chart patterns and price movement studies give me. I'm not in the melee with everybody today. I'm already positioned. So one of two things was going to happen. Either I was going to get stopped out, and so be it. It's a risk-reward game. Or I was going to get the follow-through in the direction of the trend that I was playing, and that's exactly what happened. So yeah, a day like today really is just, it's like my birthday.
Okay, so someone's smiling. Someone placed some great trades and made some money. So actually what you're saying to me is that it is actually possible to make money on this FX market, which many people in this presentation are wondering, right?
Oh my gosh, you know, I think a lot of traders, they get more complicated than need be. You know, I remember when I first used to talk about chart patterns, and I would talk about chart patterns to, say, for example, and maybe some people here in the room have experienced this need that some traders have to get more sophisticated. You know, not to blow my own horn, but I've been at this trading game for over 2 decades, and I've written books, and I've spoken all over the world, literally all over the world, and sometimes traders start to expect that because I've been doing it for so long, and because I've been an analyst, that somehow that my analysis is going to be more complex or more sophisticated. I'm going to use more elaborate tools. And I tell everybody that what's so funny is traders feel that they somehow are going to outgrow the tools that they started using early on in their careers. And early on in my career, I was a support and resistance kind of trader. I liked chart patterns as they are really made up of support and resistance. And I love the idea of understanding the rhythm of the market from my day trading years. And I think sometimes traders think that that's not enough. If I first learn how to trade with these, I have to leave them in the dust and move on to something more sophisticated and more mature, or whatever the thinking is. And for me, chart patterns have been around for literally, I don't know, the first chart patterns I've seen in books that I've read, some of them are 100 years old, literally, from books that were written in the early 1900s.
Yeah.
There's a reason they've stood the test of time.
Yeah, and I mean, I think it's interesting. I mean, do you think it's a function of greed or boredom for the retail trader? It's like if you keep doing the same thing in and out, do people forget about the fact that, hey, my simple technique is actually making me money? You know, why change? And I always say never fix something that's not broken. You know, but people seem to have a different concept in their mind. What do you think is the driver that drives people to become more complex?
Well, I think two things happen, and this is where I have to give you some credit. I think a lot of traders use, and I'm going to, dare I say this, but this is all just my opinion, so obviously that's why I'm here to share with you.
That's what you're here, yes.
A lot of traders use chart patterns wrong. I think they use them absolutely wrong, and one of the things I was most impressed about, long before I met you, was the fact that AutoChartist was the only company that actually made the trend, the underlying trend of the market, part of the analysis. And if anybody studies my work, they know that I'm a huge fan of Charles Dow. I'm a huge advocate of understanding the market trend, and that before I can trade any kind of chart pattern, I must know what the underlying market environment, the underlying market psychology is. Because it's one thing to find a triangle, but am I finding a triangle within the context of a trend, where it's a little bit of congestion within a trend? Or am I finding a triangle within the context of an overall chop? And that's where the initial trend study on the AutoChartist blew my mind, because I thought to myself, these guys get it. They understand that it's not enough just to find the lines and levels and present them to the trader. You have to talk about the initial trend. You have to talk about the volume. You have to talk about the aesthetic quality of the actual pattern, where the uniformity and clarity become part of the analysis. It's not enough to say that the lines and levels have formed, but what are the balance of those touch points that form the lines and levels? There's your uniformity reading. What's the clarity of the pattern? Are there a lot of random wicks and volatile price action? Because that then diminishes the possible follow-through and increases the possibility for false breakouts and breakdowns. So again, when I saw this, and I don't know how many traders actually spend a lot of time in this section to the right, you can see it on my screen, everybody, with the trend change, the size of the pattern discussion, the initial trend, volume, uniformity, clarity. These are all ways that you can consistently and, more importantly, objectively rate what quality the pattern has. It's so important.
You touch on a very, very important point there. I mean, I think a lot of people, they kind of, I guess, looking for the answer, but there is no single answer. I mean, you know, everything is I guess, for me, certainly the way I trade is a combination of factors, right? It's the more supporting evidence you have for a trade, you know, the more reason for you to actually place that trade, and the more, but actually you need to also understand what you're actually looking at, right? People just they see an arrow and they see a little green line, like on the example that you have on your screen now, but they don't say, oh, they don't actually look at it critically. They say, oh, AutoChartist thinks, you know, Australia, Canadian dollar is going up to 0.9891, but they don't actually try and understand, like, what is it that we're actually saying? What is the underlying meaning of this resistance level? Is there some kind of psychological breakout? Isn't there? Like, they don't actually, just kind of looking for, I guess, some kind of price target, and they just follow it blindly. And you're saying, no, what you need to do is you actually need to understand what this actually means.
Well, I'll give you a great example. I think a lot of traders might open the platform up. So I'm imagining most of the traders are out there like me. You know, they're probably looking at multiple monitor setups. They'll probably have their charting platform, maybe an order entry platform, and then maybe even the AutoChartist platform across their screens. And at some point, I think, not that I want to put everybody into a template, and not that I want to force everybody into my kind of schedule, but let me just share with you what I recommend people do, because this is what I do. So the first thing they can do, if they want to be able to cast a concise net, in other words, it's so important to work from an understanding that you need a list of pairs every day, if not at least every week, but every day that you're going to focus on, because there's so many markets out there, so many time frames, it would be easy to get lost in all the choices. So one of the easiest things to do is just sign up for the free report that will arrive in your email box, and here you can begin to take a look at a number of names, a number of pairs. Maybe you don't trade the Euro Swissy. You know, I don't trade the Euro Swissy very much, so I can eliminate that. I don't have to trade every one of these, but maybe some of these charts have been on my radar. So I can actually make a list based upon AutoChartist narrowing the field down for me, giving me some potential opportunities. Maybe I want to focus only on trending patterns, so I can go through some of these patterns saying, you know, I like the trending pattern on the dollar Swissy or the dollar yen or the cable. Maybe I like the trending pattern on the pound loonie. It's a pair that I personally have been trading. So I'll make a list based upon some suggestions. It's a great way to start the day, so you have a concise focus list, a watch list, if you will. Then you can go ahead at that point and start taking a look at those patterns specifically on your trading platform. Transfer over some of the lines and levels if you'd like. Take a look at the underlying market trends. In fact, once I take a look at something like the Kiwi US, for example, I want to know what the underlying market trend is that this pattern is occurring in. So you begin to filter based upon AutoChartist doing some of the heavy lifting for you. You begin to filter some of the opportunities. Then, to me, you know, heading over to an economic calendar that shows you when volatility may or may not increase, and pulling up, again, my favorite tool, one of my favorite tools of any tool that I use, one that, again, I feel is my secret weapon. I'll go into the volatility analysis for that pair, and I'll start to take a look at what the rhythm of that pair is in accordance to maybe what the economic calendar is suggesting could be volatile hours, because it's during some of these more volatile hours that I could see my trade actually get triggered. So one of the things that a lot of traders tell me is, okay, Raghee, I've got a list and I know what I want to trade, but how do I know which pairs are most likely to actually trigger today? And that's where I tell them, hey, you've got to head on over to Power Stats. You've got to take a look at the pip range movement in conjunction with an economic calendar and ask yourself, is there enough volatility, potential volatility in this pair to trigger your trade? And even if so, when? So now I've got a pretty good idea as I trade the Aussie Loonie between the hours of 8 and 10, maybe about 11 o'clock. I could see the greatest increase of volatility. I know whether or not my entry level is within what I call striking distance. In other words, wherever that pattern or horizontal level may be broken, how far away in pip movement is it from current price? I can get an idea of whether or not it's even realistic to be reached by looking at the Power Stats. So now, not only do I have a focus list, I also have a list that gives me proximity. In other words, I know what is most likely, possibly, to trigger today. And I can put all my attention, or most of my attention, there, and I don't feel overwhelmed by the market because I have a realistic chance of seeing a particular fill. I know why, I know what, and I know where based upon the chart pattern or the horizontal support or resistance alert that I have. I hope everyone kind of followed that, because it makes the day much more, you feel like you're in control of the day rather than being in reaction to the day, which is why on a day like today, when the dollar is going crazy, I don't feel the need to go chase it at all. I'm already positioned in the market because I've done this homework ahead of time. I've anticipated the move, I've managed my risk, I've put my order in, and today is a day where I can just sit back and watch it like a great football game.
It's actually interesting for me, Raghee, that I picked up a number of things that you mentioned during what you just said now, the last few minutes. The first thing is that, firstly, just on a side topic, I'm really delighted to hear that you're actually subscribed to the market report. So that's awesome, because that's a feature we just added in the last like a month or two. So firstly, I'm delighted about that. But that's off topic. There's two things that I picked up primarily. Is the first thing is that you use almost like a step-by-step process, right? You're not just looking for kind of, you're just opportunistic and just looking for any opportunity that comes up within auto chartist or in whatever your trading strategy is, you work very much according to a kind of a filtering process. It's almost like a kind of, in my mind, I have this kind of pyramid structure, you know, where you start off with a lot of opportunities and use certain criteria to kind of narrow that down, right? So that's the first thing I picked up, and I hope I've understood you correctly. And then the second thing that I picked up is that once you've made your selection as to which instrument to trade, you know, one of the most important things is obviously the appropriate way to set your stop loss and take profit, right? Because if you set them inappropriately, then you don't give yourself a chance to actually make money. Have I understood you? Have I understood your process correctly?
You have. In fact, it's very much that filtering process. And I think one of the things a lot of traders don't have, or maybe initially may be overwhelmed by auto chartists, is you really do need a filter. You know, I think that if you were just to hop on over to the trading opportunities, pull up a number of pairs, you would feel a sense of overwhelm. But I think a lot of traders don't realize that there are two terrific filters built in to auto chartists by way of the Our Favorites page, where I could actually get very specific about how many opportunities I want to see and the quality of the opportunities, and then of course the messaging and alerts, which is going to send you a fairly decent sized list, but again, you can filter it on your own. And one of the things I think traders who are new to auto chartists or just new to trading in general is they don't realize that regardless of the strategy and regardless of the power of the tool that you're using, you still must have a way to filter it. You still must have a way to hone that list down into an actionable set of trades, which is where, for me, the power stats comes in handy, because for me, a lot of that actionability is relating to what is the likelihood that I could actually see that fill, that trigger today.
That's actually amazing, Raghee. You know what? Because I've personally, I must admit it, you know, maybe I shouldn't admit this in public, but I will anyway, is I've always used the volatility analysis to set my exit and entry levels. But what you're saying, and now I think you've made it very clear to me, you're saying is actually what is the likelihood of actually reaching the level that auto chartist is actually forecast, which is actually a completely different view on volatility analysis, and I appreciate that because I've never really looked at it that way. So thanks for that.
You know, if you think about it, the pip movement range is just suggesting what support and resistance levels could ultimately be in play. And if my exit is a support or resistance level, if my profit target or stop loss is merely a support or resistance level, then too also is my entry. So it's just letting me know which lines and levels on the chart could possibly be in play. So yeah, for me, it does help me manage risk. I think a lot of traders use it from a profit target and stop loss perspective, and if they don't, they should, because ultimately, if you wander into a trade, and I'm telling everybody here in the room right now, if you wander into a trade and you are unaware of what type of volatility you could see depending upon the financial center you're trading, depending upon the average high-low of the hourly range you're watching, and the economic reports that will overlap with those hourly ranges, if you're unaware of that, oftentimes that is precisely what leads to the panic reactions a lot of traders have, whether it be a panic exit, you know, oh my gosh, I'm making money, let me get out, or oh my gosh, I'm losing money, let me get out. You can avoid those panic reactions because you're already very familiar and aware with the historical expectations of that pair, and you can work within that understanding. Again, it's more knowledge, it prevents panic, but for me, absolutely, it's very important to my entry strategy to understand what power stats is telling me.
Yeah, it's actually interesting. A few years ago, and I don't remember where it was, but I was speaking to a professional trader. Man, I wish I could remember who it was. Anyway, that aside, and I remember words from him that said, you know how you test whether you're a good trader is you open up your random positions and try and see what the trader does in terms of managing risk and actually when to close the positions, because there's a school of thought that actually when you open the position, the direction you open a position is sometimes secondary to actually how you manage your risk and how you close it. So I think people don't put enough emphasis on their stop loss and take profit levels. You know, I think they just kind of overlook them. They seem to just I guess, open a position and just guess, I don't know, put their hand in the wind and try and guess an exit level, rather than actually what you're saying is be prepared and know and understand what to expect in the market.
Absolutely. I think for a lot of traders, and I will admit that a good entry does make for an easier trade. Sloppy entry,
of course.
for sure. But I think to your point, is I think a lot of traders, once they get in, I'll ask them, where do you want it to go? And if they're long, they want it to go to the moon. But I think just like every business, a smart businessman has an exit strategy for his business, and I consider every trade a small business. So I have to have an exit strategy. But I think a lot of times it becomes a random thought for a lot of traders because they're taught in the school of I'll risk 20 pips to make 40 pips. They'll use these fixed pips or fixed percentage type approaches, which I could not agree with less. I think that approach is very, very much going to lead them down towards a frustrating trading career. So rather than use these random levels, what I always tell traders is, wait a minute, with power stats and understanding time of day rhythms, you absolutely can get a very concrete idea of what your stop loss should be. I know a lot of traders say, hey, the market came and got my stop loss and then went off and headed in the right direction without me. And I'll always ask them, well, where was your stop? Was it in relation to the volatility based on time of day and the kind of volatility you can expect to see on that pair? And they usually look at me with blank stares. Or they'll say, oh, but I use average true range. I said, no. Average true range is not the same thing as a historical study of what this pair is capable of doing over the past, say, 3 months, and then overlapping or overlaying that with your overall risk management and profit target placement. To place it randomly without an understanding that certain pairs are more volatile, I would not look at, say, the dollar-yen with the same price movement expectations that I would look at, say, the pound kiwi. They're very different in their personalities, and I think a lot of traders, until they understand that each pair has a personality and they can see it spelled out to them with something like power stats, it doesn't click. For me, that was really an eye-opener where I realized that using a 20-40 strategy, which, I'm just using something random, but a lot of traders do use these fixed pip approaches. It's absolutely wrong until you understand what kind of pip movement you could see. I hope that makes sense.
Yeah, I mean, right, you make complete sense to me, and we see it so often with the kind of emails we get to our support desk at Order Chartist, where people just use these kind of arbitrary numbers, for stop loss and take profit levels. It's and I think the one kind of underlying thing that we've always, or principle we've had at Order Chartist, is to try and get our traders and our users to actually understand the market, have a deep understanding of the market. Now, we spent a lot of time talking about kind of generally how you use volatility analysis. Do you think you would be able to, well, you can say whatever you want to say if you have some other things to say about it. Do you think you would also be able to maybe look at an example trade and say how you would actually evaluate whether that's a trade to follow or not?
Sure. Let's see. I'm actually, my head's looking ahead to later on today, so let me give you an example of what I'm doing. So right now, first of all, everyone, I apologize because I'm actually on my trading computer, and I typically don't do webinars from the trading computer, so I have a massive amount of software running in the background right now. So I apologize if anything's slow. It's actually my own PC using up massive amounts of memory and processing. So I apologize for any of the slowness.
Thanks for defending Auto Chartist, Raghee. I appreciate that.
I'm sorry?
I said thanks for defending Auto Chartist. I appreciate that.
Oh no, one of the first things I usually tell my students is, hey, have a computer that's only for your trading, and of course I break that rule each and every day, and obviously sometimes I have to deal with that. So let me give you an example. One of the pairs I have queued up here, obviously, is the pound kiwi, and I'm looking at the pound kiwi today mainly because, and again, what I want everyone to understand is I may trade longer term time frames, but I want everyone to understand that there is absolutely application for those of you that may be a little bit more nimble in nature. So if you are a little bit more short-term in nature, definitely I would recommend look at those 15 and 30-minute alerts, or maybe even the 60-minute alerts. You can absolutely make AutoChartist. What I call AutoChartist, and I've been saying this for years, it's like your trading partner in the room. So the things that you don't necessarily have the time to do or the attention to do, AutoChartist is doing in the background. So while I wouldn't blindly listen to my trading partner, I am going to put a lot of faith in that trading partner to present to me opportunities that then I can filter. So that's the way I'm comfortable with it. I look at AutoChartist as that trading partner saying, hey, you might want to take a look at this, you might want to take a look at that, here are opportunities, then go ahead and run your own filters through it. And of course, obviously everybody has preferences for time frame, everybody has preferences for particular pairs. So look at them as suggestions, look at them as what they truly are, which are alerts with a high probability of success. I mean, obviously that's where AutoChartist got its name from. That's why I trust it. I wouldn't use this thing for 10 years if I didn't trust it. I would have found out very quickly as I start to trade that, hey, this is not making me money. I would have ditched it a long time ago if it wasn't getting the job done for me. So part of that is just spending some time in the platform and developing the knowledge and the trust of the platform. So, obviously one of the luxuries I have is I've had the time to develop that knowledge and trust in the platform. So for example, one of the things that I've been wanting to do, and I have this set up actually in my books, which is the short on the 240-minute pound Kiwi. This is a trade that not only I set up with some of my own filters, it is confirmed by the channel down on the AutoChartist. It's confirmed by what I call a bearish, well, actually it doesn't have directional bias, but it's a bearish trend on that 240-minute time frame. There is starting to become more bearishness on the daily chart. So one of the filters I have here is that trend. For those of you saying, well, Raghee, I don't have your tools, well, take a look at the initial trend here. Okay? The fact that I have, what do I have, 6 bars, the trend here? Yeah, I have 6 bars in that initial trend. That to me tells me that while it may not be the strongest trend that I could be dealing with, I do indeed have a trend on this pair. So when I'm looking at a trending chart pattern, which is what a channel down is, I've got a good matching of not just the underlying trend, but also now of the actual pattern setting up. So a lot of traders will look at a channel down and say, well, I could trade the reversal. And certainly that is one opportunity. What I'm going to be doing once AutoChartist has alerted me to this particular setup is I'm actually going to be looking for opportunities to sell into the resistance of this pattern because I have a downtrend, I have weakness on the daily time frame. So I'm going to sell into the downtrend on this pattern, on this particular time frame. Another thing that is happening simultaneously for me where this 240-minute setup could be invaluable is in any trending time frame or any trending pattern. So again, this 240-minute time frame on the pound Kiwi, I know that the channel, the resistance of the channel is what I call the validity for this trade. In other words, the downtrend line resistance of this pattern is where I need to see that the higher highs are contained. Because we actually right now, and for those of you that have been looking at the pound Kiwi, maybe at the end of day time frame, know that we are actually dealing with a 200-period simple moving average, which is apart from the AutoChartist, but significant from a technical and psychological standpoint. So what if that 200 creates enough of a bounce from that level to actually break the 240-minute trend? Well, no problem. At that point, I can switch from a trend following channel down approach to a trend reversal. And I know exactly where that's going to happen because I have this trend line at my disposal. So that's one of the trades I have right now that I'm looking to take advantage of, a trend follow on the pound Kiwi with expectation that perhaps the Chinese data tonight is going to be positive, that perhaps Governor Stevens, when he speaks tonight, is going to speak positively about the Australian economy, which will bode well in a sympathetic nature for the New Zealand dollar, and I'd like to follow this trend. I'll know when the trend is broken because the pattern will be broken, and at that point I can decide whether or not I simply want to stop that trade out or whether I want to stop the trade out and or reverse it. So that's a live example of something that I'm setting up going into tonight's Asian session.
Raghee, sorry to interrupt you for just a moment, and I just want to highlight something to the listeners, is that you are on a section called expired trading opportunities, right? Mm-hmm. Is that just for the purposes of this presentation, or do you always look at the kind of the older type of patterns, or do you sometimes go to the active trading opportunities when you're actually looking at new opportunities in the market?
I actually scan them both. Them both, and like I said, some of these trades have been trades that I've had going on for some time. I actually scan them both because what AutoChartist does for me, and I'm glad you mentioned that. So here's under the active trading. I'm glad you mentioned that. So here's the same pattern essentially that I'm looking at on that pound kiwi on the active trading. So the thing is, I will actually scan them both because a lot of times what the AutoChartist will do for me is identify lines and levels that are in play. Remember, if I'm using AutoChartist as my trading sidekick, as my trading partner, part of what I expect of it is to find lines and levels that, one, I've either missed, or two, I might be too emotionally involved to recognize. So AutoChartist just puts the blinders on for me, allows me to have a more objective, less emotional side to my trading, and oftentimes will find these lines and levels that I may have just simply overlooked in just the hecticness of my day. But yes, I'm glad you mentioned it. It is actually on the active trading opportunities as well. So,
Raghee, we have an interesting question. Normally, I don't really take questions kind of midway through a webinar, but I actually, David actually asked a very interesting question. He says sometimes he gets conflicting information from AutoChartist. Sometimes, I don't think there's an example right now. I'm busy trying to click through my platform right now. But sometimes you get a bullish and a bearish signal from AutoChartist with regards to chart patterns. Have you seen that kind of thing before? And if you have, what would you do with that?
Well, I'll even cast a broader net on that question, David. It's a terrific question. Sometimes you might get shorter-term time frames that are triggering bullish type entries or entailing a bullish strategy, while a longer-term time frame might still very well be bearish. So you can have conflict in time frames and the patterns that each time frame develops, or you can have even sometimes patterns that arrive in the same time frame for the same pair that could suggest alternate strategies, alternate entries. One might be short, one might be long. I actually don't see that very often. But remember, AutoChartist is recognizing, one, the touch points on the time frame, and then connecting the dots to draw the lines and levels for that pattern that's developed. So what I would recommend, and this is where, and I think AutoChartist also accounted for this by having the trend change, having the direction, giving you the length of the pattern, giving you the initial trend, the uniformity, clarity, because now you can actually go in and compare the two patterns. So here are a few tips to help you with that if and when it does come up. One, look at the size of the pattern. The larger the pattern, in many ways, sometimes the more that particular market trend has been working, and therefore that psychology may be a little bit more dominant or more well accepted. Okay, so look at the size of the pattern. Then I also want you to consider the initial trend. Ask yourself, if this is a trending pattern, do I have a fairly high initial trend reading? Because if it is a trending pattern, I'd like to see at least 6 initial trend bars. Okay, at least 6. 6 or more, to me, denotes a higher and higher quality of the trend. I want to take a look at the uniformity. The uniformity is, to me, one of those aesthetic indicators that tells me, is the pattern balanced? Are the touch points spread out throughout the pattern? That's what clarity tells me. Okay? So ultimately, by looking at the initial trend, by looking at uniformity, looking at clarity, you can get an understanding of an objective approach to what the trend may be. You can get an objective aesthetic opinion about the quality of the pattern, and then also the clarity. Now here, I don't have a lot of uniformity, but the clarity is very high. In other words, if the clarity is high, I can trust price action more. I love a high clarity reading. I'm okay with a slightly lower uniformity reading, although I want to be aware of it, but I really do demand a high clarity reading because that allows me to say that price action is organized to a high enough degree that if and when we reach one of those lines and levels within the pattern, I can trust that most likely, there's enough of organization that I'm going to not have to deal with those wicks and that random noisy price action that accompanies a pattern with low clarity or a market with very high volatility and confusion. So those are some of the things that I would tell you. Compare the two patterns. Very likely they're not going to be of the same quality. AutoChartist knows this, hence they're giving you the transparency behind each pattern. They're not just giving you a pattern, they're telling you, well, here's what we think of it. The lines and levels have shown up, but here's what we think of it. And I hope that helps, David.
Yeah, it's actually very interesting. I think the other thing I need to point out is that, again, also don't want to blow our own horn, but at AutoChartist we don't, shall we say, change our mind and cherry pick what we provide. When we say, you know, there's a trend, we've identified a trend, and then, you know, an hour or two later, we get something contrary to say, oh, the trend is now going down instead of up. We don't remove the old forecast, right? We said it. You know, it's like saying a rude word to somebody, right, or swearing at somebody. Once you've said those words, once those words are out of the mouth, you can never take them back, right? It's the same thing with the markets. You know, you always make, I think, a decision based on the information, the latest information you have available to you. And, you know, sometimes that information changes, and in the markets it can change really rapidly. You know, I think that's just the reality of the game that we're playing in the stock market.
Absolutely. Thanks for adding that in. You know, I'm glad that Alon is here to kind of reel me in because sometimes I get a little too excited about all this.
Yeah, Raghee, I wanted to ask you a question. I mean, like, I don't, from what I recall in your trading style, you don't use much of Fibonacci patterns, do you? Are you mostly a chart patterns trader?
No, I do use the Fibonacci patterns from time to time, but what I want to tell everybody in terms of the Fibonacci patterns and my use of them, they are subjective, and I'm not saying they're subjective simply on the AutoChartist platform. This Fibonacci is a subjective way of looking at the market. So if and when I do employ the Fibonacci patterns in my analysis, it's only after. So for example, if I'm looking at a 3-drive or an ABC, the way I do it, it's going to be only after I have understood the underlying chart pattern and how that overlaps with, for example, the underlying Fibonacci or pattern or even the power stats. So there has to be a hierarchy. You know, I don't believe that all tools can be weighted with the same importance. So for me, AutoChartist can actually be its own filter. I don't actually have to leave it if I don't want to. I can start off with the messaging and alerts as my focus list. I can go to our favorites to even further hone that focus list of pairs I'm going to look at. I can then go to power stats and find out what actually could realistically be in play. Once I have my chart pattern and then I have the lines and levels that I want to engage the market at, I could then take another layer, jump in another level, if I will, more depth. You know, Fibonacci adds more depth, but it's not a primary filter. It's a little bit later on. So if I want to add a little bit more depth to projecting where the market could go within the pattern or where the market could go after I'm actually entered into the market, whether that be towards a stop loss or towards a profit target, the Fibonacci then can offer some assistance. So there has to be a filter, as you told me, as you mentioned earlier, and I agree with that, and there has to be a hierarchy. So it's not that I don't listen to it, it's just further along down that line. I hope that makes sense.
Raghee, you are so diplomatic. You know, I am not as diplomatic as you. You know, I'm not shy to say that I don't use Fibonacci because I feel that in the markets, if you draw enough lines on the chart, something's bound to hit one of those lines. But that's kind of my feeling about it. It's interesting that we do identify the AutoChartist because we try not to let my own personal trading style influence what we provide as a product. But I'm quite heavily critical of Fibonacci, and just merely just the quantity of lines that one draws in the chart. Something always gets hit, and then so the person comes and says, "Oh, you see, Fibonacci really works." Yeah, if you draw 20 lines on the chart, one of them is bound to get hit.
Oh, absolutely. And that's where it's so important to have that hierarchy, because if I considered Fibonacci and everything else on the same plane of my analysis, I would be completely paralyzed. Most traders run into that paralysis of analysis, as is often used as a description of new traders in trading, because they consider all the tools equally important. And for me, that pyramid, the way you talked about, continuing to hone it and hone it and hone it is the only way that I could keep all these in perspective, because the Fibonacci only will be as important as the initial groundwork that I have laid in terms of where the chart pattern is going to take me. In other words, if my Fibonacci takes me outside of the chart pattern, my chart pattern was the primary analysis, and in addition with the power stats. So Fibonacci is going to be used within those confines. If Fibonacci disagrees with those, because it's a down the hierarchy, I won't give it as much weighting as my initial analysis with the chart pattern and the power stats. Fibonacci is just there to give me its 2 cents, maybe give me some detail about where the market could go, and if it overlaps with levels that I think are important, I might give it more credence. But it's not going to override my initial foundation of the chart pattern or the support and resistance in addition with power stats. So you have to have that hierarchy.
So Raghee, I was going to move on to the next kind of question that I wanted to ask you. And interestingly enough, we actually had a specific question around it now by Danette. I was going to ask you, well, Danette's question is specifically, do you use moving averages? Actually, I don't want you to answer that question specifically. I would like to ask you, what supporting indicators do you use to confirm a breakout or a turnaround or a trend? Can you give us some guidance as to what you personally do?
Sure. Again, anybody could probably be as single-minded in their AutoChartist analysis. In other words, I think traders probably could use AutoChartist as the sum total of their indicators if they wanted to. So I don't want traders thinking you need something else, because you do have the let me go back over to a chart pattern here. Because you do have the initial trend and the quality indicators, essentially. You have the overall quality reading, but the quality indicators, of course, are the initial trend, uniformity, clarity. So because you do have that, I don't know that you absolutely need a secondary set of tools, but I do use my secondary set of tools. It's not necessary, and of course they're individual to everybody, but I have something I call the 34 EMA wave. Some of you may or may not be familiar with it. So the 34 EMA wave I will use in the same mindset that I use the initial trend. So I'm looking for what is the underlying trend of the market, and does the pair match up with, or does that particular pattern match up with what I think the underlying market should be. So for example, in the case of, I'm still on this pound kiwi here, I have a very low initial trend reading, which is perfect for me within the context of a congestion to consolidation pattern like a triangle. So I've got an excellent pairing here between the initial trend reading that I would like to ideally see and the pattern. When I go to my charts and I take a look at the 34 EMA wave, which is the 34 period exponential moving average, I have one on the high, one on the close, one on the low. For those of you that are familiar with what I do, you may already be familiar with that. But what I'll notice on the 34 EMA wave is probably we haven't yet completely transitioned into a downtrend within the context of the lower lows that we're seeing, although I know, because I'm trading it right now, it is starting to look more like a downtrend, but it's still early enough within the transition to the trend that we're subjected to possibly some more chop. And as I move lower in that choppy range on the daily pound kiwi, I'm going to keep in mind that I have this uptrend line here that could very well be, one, a profit target for intraday trades, and two, an exhaustion point for my for this particular pattern. I don't know at what point this pattern is going to break. The more it squeezes into what I call the narrows of this pattern, where the trend lines, these two trend lines, the uptrend line and downtrend line, squeeze this pattern like a tube of toothpaste, at some point I know, triangles being self-limiting patterns, we're going to get a breakout. At that point, I can look at the breakout reading and see just how much momentum was involved in that breakout and make a decision as to whether or not I want to play the buy through resistance or the sell through support. But ultimately, the other tool that I use in conjunction with the auto chartist would be the 34 EMA waves, and I do have a handful of different moving averages, but again, it's really up to the individual how much they want to stray from the tools here. And what I find is a lot of my tools, my personal tools, overlap with a lot of what auto chartist has, which I think is why I was able to trust and incorporate auto chartist into my trading so easily, because it was already speaking my language. I know that's a rather large answer, but I wanted you to know, everyone here to know where I'm coming from in regards to that.
Thanks, Raghee. Raghee, you know what? We're kind of almost out of time. There are one or two interesting questions. If I could ask you to just answer them relatively briefly.
Sure.
Along with the moving averages, do you ever use any kind of oscillators like stochastics or RSIs?
So every pattern has an underlying market trend. So if I get a wide channel alert from auto chartist, I'll use a stochastic, because wide channels are more likely to exhaust at the range extremes. And if I have an initial reading, initial trend reading of say 3 or 4, I know I'm probably not in an established trend, yet I'm not quiet enough to be really in consolidation. So that 3 or 4 reading, maybe even 5 on the initial trend reading, suggests congestion, and I'll use the stochastics to play overbought and oversold levels. If the initial trend reading is very low and I'm in a narrower trading range, I'll use an MACD histogram to confirm the breakout along with the auto chartist breakout reading. And in the case of, for example, if I have a trending pattern, we can use that aforementioned 240-minute pound kiwi, whether you're looking at the falling wedge or whether you're looking at the channel like I am. If we were to get a reversal of that pattern, so the market was heading lower and we get a reversal, and again, I apologize for how slow it is. I've just got so much running on this computer right now. But if I were to get a reversal of that pattern, I would use a CCI to play that breakout. So you can see here we have a downtrending pattern. I want to follow that trend, but if I do get a trend reversal, then I would want to use a CCI to confirm that trend reversal. So yeah, I do have individual indicators to confirm the different types of behavior I could see within the context of the trend and the pattern itself.
Raghee, I think we have to call it that. There are a few other questions coming through, specifically with regards to which time frames to actually look at. I do believe you mentioned, the fact that the longer the time over which the pattern was formed, the kind of more significant it is. I remember you recall that. There are a few questions around that. Maybe you can just say a few words just around the kind of the pattern length, and then I think we need to wrap things up for today. I think we're out of time.
Well, I think, gang, we could probably twist Elon's arm, and we could do this again maybe in a couple weeks. so maybe you guys could.
Yeah, you know what? I'm actually off to Moscow next week, or the following week it is, and then I'm off to South Africa to be with our team in Johannesburg for a week, and then I'm off to Santiago, Chile for a show for a week, and then I'll be back, and then maybe we can do this again in kind of in December.
Absolutely. So to answer the question very quickly, remember that the dominant psychology of a market usually resides on the daily time frame. So you want to understand what the initial trend reading is on the daily time frame as applicable with the chart pattern, and then understand that anything that goes against that dominant daily trend is either then going to be counter trend and should then be taken on a shorter term time frame, and if it's trend following with that daily chart pattern and initial trend, you can take trend following entries across any time frame. So use the daily, if you can find daily alerts, use the daily alert, understand what that dominant trend is, and then when you look at the intraday alerts, the 15, 30, 60, even the 240, you can at that point decide whether or not you're actually playing a counter trend pattern or a trend following pattern, And that's a great way to do just kind of a cursory filter of balancing out all the different alerts, whether they be short or long term. But use those daily alerts, even if you have no intention of trading them. Have a very clean or a very keen idea of what those clean patterns on the daily charts are telling you about support, resistance, and the underlying trend.
Raghee, and on that note, I must thank you on behalf of myself personally, and I'm sure on behalf of the audience, for an absolutely fascinating talk. Always a pleasure, talking to you. Always learning something new. I really appreciate your time. I know you're very busy. Get back to your trading. I hope the rest of the day goes very well for you. And we'll be in touch very soon. Thank you, everybody, for joining us again. Talk to you all soon. If you have any questions, please email support@autocharters.com.